All right, is Bitcoin going to make another higher high and pump through up to the and above the weekly 10 EMA above 23,000, or are we forming a lower high and we're getting ready to tank down? Let's jump into these charts. I'm going to show you a pretty simple tool that you can use that aligns with another powerful EMA, but it essentially makes it fatter with color coding. Should help guide you on your crypto journey. So let's get these charts. All right, on my channel, I've been talking about using the 4-hour 10 EMA as just the best fit line. If price above, then short-term time frame bullish. If price below and using it as resistance, then short-term time frame bearish. And it's during out this whole accumulation phase after the big drop down to 17,500. It's been the best line to use. That gives you that exact signal. It's the one thing that is just so simple that has the best tracking history during this one consolidation area for short-term time frame direction. But there's another cool way to look at it. You can make it essentially fatter and color code it bullish or bearish, even though you could tell if it's getting resisted, okay, it's bearish. But if you go like this, take that off. Actually, I'll leave it on so you can see how it overlays it. Boom. You got a nice fatter line and it's color coded. And so let's show you how to use that real quick. I'll pull up the indicator list, and as we're doing that, just make sure if you're not following me on Twitter, Cosasverdes with the number 2 afterward. I post some bomb charts for traditional markets, altcoin, Bitcoin, and Ethereum, and links to Discord in the description section of my videos. And YouTube tiers, they get priority during the questions during the Q&A during these live chats, and there are other benefits such as the Cryptolian tier gets 15 to 30 market alerts a week, and the recordings of the Discord Cryptolian tier live chats. All right, and the Cryptolian workshop as well, recording of that as well. All right, the morning workshops. So here we go. This is using the I'm hovering over it right now. Moving average shaded fill area crossover. I've covered this on my channel with different EMAs before, different time frames, by A Ballard 11. All right. Click that, and then it'll populate over here. You click the you can't see behind me. Let's go over this way. Let's move myself. You click the gear, and I'm on the 15-minute chart. So the 200 and the 55, and then these are the fill colors right here. These two are the color of the line. Not that important. They could both be white technically, but I have green and red for the fill. For when the top, so when this one crosses below that one, it turns red, and when the faster one crosses above this one, it's green, right? And so you can see how the 4-hour 10 EMA. I'll flash it on and off so you can see. Boom. Can you see it flashing in there? Barely. I would have to reduce the opacity. So it's essentially the same line, and I just actually discovered this that it was the same. So it's a fatter version of it. And in general, it's the same thing, just to use the 4-hour 10 to determine, hey, are the 5-minute candles using it as support or resistance? So right now, you had a cross down, cross up. It's getting wishy-washy, but right now price is above it, and it's wicked down to use it as support once. Is it guaranteed it'll continue using it as support? Not really, because it's already crossed down once. It could float and then tank, right? It could really just sometimes one of the, how would I say this? One of the weaknesses of EMAs are compression moves, because the EMAs, depending on the time frame, so if you go down to a short enough time frame, they'll just all be squished, and you might as well take them off because it's not giving you any signals, right? When that happens, so there's a weakness to that. So this could fail us, by going sideways long enough and just squishing down. So there are situations where there's a weakness in using EMAs in general, and this EMA fill is based off EMAs. All right, so this isn't a foolproof way to trade, but it's pretty cool, and it helps you a little bit more visualize the 4-hour 10 and how candles interact with it. Thought I'd share that with you. Right now, what am I thinking? I'm thinking there's not a crazy awesome edge either way. I do have a target. It feels like Bitcoin at bare minimum, perhaps even before traditional markets open on Friday at 9:30 a.m. New York time, I feel that Bitcoin has a dang decent chance of at minimum hitting this line. Will it reverse from there and go down? I'm not saying that, but I just feel that this target is going to be hit, as opposed to going straight down from here. Is that guaranteed to happen? No, of course it's not. But I'm getting that feeling, because you have a lot of defense here. You have these EMAs, which is essentially the best fit line. Plus, you have a micro channel line here. So if we zoom out, you know what we're looking at. So the EMA is going to look different because I switched time frames. But this is the channel we're working with here. Micro channel going back to the middle of June, the low of the year, and prices above that line and this EMA. So you got a lot of defense there. So I would lean in micro time frames. I would lean a little bullish, not crazy bullish, but if I had to pick one which has slightly more probability than the other, I would say barely probability to the upside. Even if it breaks through here, it kind of feels that it would make some type of higher low at a 45-degree angle to this, something to this effect, and maybe a pullback overnight would be fine. Something to that effect. Pull back to here, and then I still feel as of now that as long as it keeps a higher low structure to this low, I still think it has a decent chance of hitting that line. Of course, if it comes all the way down here, do the chances of this happening, so that would be $23,700 Bitcoin. Does it reduce the chances of 23.7 Bitcoin or higher? Yes, it does. It does. But I would keep an eye out for that, right? I would definitely be less bullish if it were to come out here. It's not like, ooh, it's lower, I'm even more bullish. Not what I'm saying. Please don't interpret that. Like, I would not be more bullish because it went lower. Rather, I would be defensive there, or if I took a short, I'd be looking for it to bounce there and probably take profits around that area, because crypto loves 45-ish degree angles. Somebody got on to me in the comment section. You always talk about 45-degree angles, but you're drawing 30-degree angles. Well, maybe so, whatever. But roughly 45-degree angles, okay? And so right now, I don't feel a whole lot of short-term time frame edge. What's important to realize, though, is if you look at the 12-hour, so things start getting a little fuzzy here. I'm not on the 12-hour, but slightly larger time frames. Things are, even the midterm time frames are starting to get a little fuzzy, a little bit less bullish here. Fuzzy meaning less clear. So the 12-hour still looks clearly bullish. It's bouncing. It's on its EMA like that, and it's making higher highs and higher lows. Like, this is. So the 12-hour, if the 12-hour is still bullish, that means the daily and the 2-day are still good to go, right? And any crosses up that look like an initial move on the weekly, like the stochastics crossing up on the weekly, this supports the idea that this 12-hour RSI supports the idea that they will continue crossing up. It's not going to be a dud. Here, I'll just show you. So this chart right here, the 12-hour RSI, which is a great time frame to have. If you don't have paid for Tradingview and you can't get the 12-hour chart, it kind of stinks. Using the mixture of the daily and the 4-hour, kind of mixing those two together in your mind. But the 12-hour, that's what that does. I think it's a really pretty chart because of that. So this supports the idea that, so go to the weekly and go to the Stokes. The Stokes are crossing up, and they're trying to leave the bearish zone. And the 12-hour chart, for the moment, is supporting the idea that it will bust out of the bearish zone, and that you're going to get continuation for a couple weeks. It's still being supported, but in the recent past, a time frame in the middle, like the 4-hour, was also supporting that, and now it's not. The 4-hour is no longer supporting that, but the larger time frames all in concert, 12-hour, daily, 2-day, 5-day, weekly, if those are in concert, it can easily overpower the 4-hour and lower charts in form of a higher low and a pullback before continuation to the upside. But I want to make it known that as of recently, the 4-hour chart was also supporting it, and now it lost its vote. So the higher time frames lost the 4-hour vote. Does that make sense? So yeah, it's almost like a democracy, really. I mean, if you have the 1-hour, voting yes, 4-hour voting yes, 12-hour voting yes, daily vote, everybody votes yes, then the answer is yes. Like, it's going that way, right? That's essentially how it is. That's another way to visualize agreement among the time frames. Just look at, like, they're literally voting, right? So the 4 hours now voting bearish, but it doesn't mean the final tally will be bearish. But things are changing And how I interpret that is just be more cautious, be less confident in your trade. And what does that mean? If clicking around with your money, it means take on smaller position sizes. Don't trade aggressively because your edge is worse by default. Your edge is worse. When you have less agreement among the time frames, by default, your edge is worse. That's all it means. And part of risk management, is your entry size. That is a form of risk management, absolutely. And that's all this is saying. Does it mean be extra cautious or don't trade totally at all? I mean, depending on your style, it's close to that point. I mean, I'm about at that point where I just would prefer wait till market open tomorrow and trade with the volatility of the open. If I get stopped out of what I'm in now, I will. I'll just be done until about 8:30 New York in the morning, and we'll do the futures workshop on Discord for VIPs bright and early, 8 a.m. Wednesday through Friday, and the Cryptillion tier on Discord are welcome on those futures workshops to hunt for early morning volatility positions on Wednesdays 8 a.m. So I do that 8 a.m. Wednesday, Thursday, and Friday every week for Discord. All right, so that is my analysis. Things are leaning bullish on the higher time frames, but the smaller time frames, they're kind of saying, yeah, we're losing our vote. And the micro time frames, though, they're saying, it looks like it might want to give one more push up. So if the micro time frames do push up to 4 hour, what would that mean? It could mean that the 4 hour RSI just hits this green line. It's rejected. It could be what that means. The first lower high of the 4 hour. But I still don't think, even at the exact moment that were to happen, the green hit that, I don't know. I don't think that means the bullet. I don't think the bulls get the 4 hour vote. If it breaks into there, yeah, sure. Especially if it breaks that high, yeah, okay. The votes 4 hours now voting bullish, but even at the moment it gets there, even before rejection, I still don't think the bulls have the 4 hour vote quite at that time because it's just too probable that this is what. So there could be another, and that would probably take Bitcoin up to that 23.7 level if this were to happen. And if I had to make one single guess, depending on how low this goes, I think you're going to have one more spike up to you, at minimum. At minimum. And so that's what I got for the Bitcoin analysis. And remember the implications. I know it sucks to come on here and say, oh, he doesn't know. Like, it's low probability, trading. Yeah, it's not sexy, but there are huge implications. And I'm telling you, like in your trading journey, some of the most losses you're going to take over time is when you're trading confidently without an edge. It really is, and I'm guilty of it. It happens to me a lot, and I have to look back and analyze what the hell, like how did I go on this streak, and how did I get myself in the situation, or what's going on when I'm trying to zoom out and analyze. That's often it. I was trading. I did not manage my risk with my entry sizes. I was and I did not identify my crappy edge. And I traded as if I did have one. So the implications of an unsexy analysis, like it could go either way, it's huge implications for your wallet. I promise, and I will probably repeat this over and over and over throughout the next couple years or whatever, because it's totally true and it's hard. It's a hard pill to swallow. All right, so that's Bitcoin for you. Could go up, could go down, could go sideways, but at least you have that EMA fill. So the 15-minute. 55 and 200 crossing, you can. So right now price is going below it, and that might flip me if this candle closes below here. I mean, I would probably flip. I think the micro time frames would then flip back bearish, and these would pull the 4 hour down, and then the 4 hour vote is totally like double thumbs up for bears really, and that could begin to cascade to at least make a higher low down here, and that higher low area. At a 45-degree angle from here, it could be somewhere around 22.6. 22.6 would be a decent higher low area. But that, again, that doesn't make me bullish just because it hits there, right? I would be expecting a potential bounce. That's just where I would see a possible bounce. All right, so that is your Bitcoin analysis, both upper targets, lower targets, and then how that could affect your behavior in a healthy way.